Welcome to this week's webinar. If you're watching the recorded version, it was held live on Wednesday, the 21st of March at 12:30 in the afternoon. We do these every week on a Wednesday lunchtime with Aondo, and it splits down into two parts. The first bit is, or the first half, is a look at some of the major markets. We look at euro dollar, pound against the dollar, look at the stock market indices, and we also look at gold and oil. But we'll also take a look at some trading strategy stuff, some charty stuff halfway through the webinar. The webinar will be finished by 1 o'clock. It runs for half an hour. And today we're going to have a look at moving averages. So classic trend following system. So we'll take a look at those today. Okay, but I think that risk warning has been up for long enough, so let's get cracking. So we're on, this is Aondo's trading platform, Trade Hub. I thought this week, just to be a little bit different, I thought we'd take a look at Facebook, just to start off with. Let's have a quick look at what's been going on. Clearly there's been this Cambridge Analytica story that's continued to gather momentum this week about a shock horror, our data on Facebook being leaked and stuff like that. Who'd have thought it? So the Facebook share price, has been under some pressure, but I think it's interesting, and I think it's interesting because if we went right, but just look at the big picture for Facebook. When it first came to the market, was it back here 2012? It did have a wobble, for a good year and a half before it really started to take off. And I think even though the price has come off from 195, traded as low as 162 yesterday, so in the last couple of months or so, the price has come off about 15% or so. I thought what was interesting was the move that we saw yesterday, where it did, it pushed down to 162, but as the day went on, it recovered, and I think plenty of people might think, oh, this is really bad for the likes of Facebook. But if we look at, the trade, this is the trading yesterday for Facebook. This is a 5-minute chart. You can see sort of how strongly it did rally into the close. So I think, leaving aside clearly the moral question and the legal question of who's done what with what data, I think it's interesting, that it's sold off, but clearly that big trend is still very much in place. So this sort of bad news story this week that has involved Facebook, may well end up being something of a buying opportunity. I think what's going to be interesting is a really big level to watch on Facebook, and it's these old lows from back here. So what actually, you can see what happened yesterday. The price came within probably 50 cents of that low. So it's the September 2017 low, is the lows from last year at 161. Let's call it 160, $160 a share, I think is the big level to look at on Facebook. So there's an argument, depending on what happens the next couple of days, I think it's an argument for being a buyer of Facebook on this shocking news, with stops underneath 160. So I think it's an interesting one. It's an interesting one to keep an eye on. And I looked at it yesterday, clearly, because as the story's been gathering pace this week, and we're all full of outrage, and lots of stories about how much has been wiped off the value of Facebook. I thought it'd be interesting to take a look at it. But 160 is a big level. It had a bit of a hiccup there in September before pushing out to fresh all-time highs yet again, which has been the story for Facebook now for many years. So I think it's going to be an interesting one to watch over the next few days, the old Facebook. So there we go, a little bit of topical charting there. Let's get back to our normal subjects. Let's take a look. What should we look at first of all? Pound against the dollar, I think, is an interesting one. Today, it's always an odd day today, because tonight at, I think it's 6 o'clock UK time, because our clocks haven't gone forward, but they have gone forward in the US. So 6 o'clock UK time, we have the Federal Reserve interest rate decision. So the US's interest rate decision this evening, normally guaranteed spot, lots of volatility across different markets, the usual stuff. So we could well see something of a quiet session this afternoon, I think, as everyone keeps their powder dry to see what happens. But let's pick up on pound US dollar. I think we've had some positive Brexit news this week. We all love a little bit of Brexit news, don't we? So we've had some positive Brexit news this week that's helped lift the pound. And I think it is interesting, pound US dollar. at the moment, because I think as we picked up maybe a couple of weeks ago, we've been stuck in this sort of downtrendy, almost a triangle-y type thing for a while now, pound US dollar. It doesn't change that bigger picture. The bigger picture, as I've been saying for a while now, I still think we're going to see higher prices, pound US dollar. The recovery from last year is still going. I think it's only if we lose these lows, about 136-ish, does it start to look as if that recovery is running out of steam. But that trend, pound US dollar, still definitely up. We've broken out now, so I think there's a chance for the pound to squeeze higher. But I would personally rather wait for a pullback. We've broken out the downtrend. We're sort of probing these old highs. What's that, about 140? No, it's not 140, is it? Sorry. It is the old highs up here. We're probing through 140.70. Big level, big obstacles though coming up at 140, 150. So I don't think we're going to be seeing 143 plus in the blink of an eye, but it does look to me, at least anyway, we've broken out. Any weakness looks like a buying opportunity, I think, pound US dollar now. So I think the interesting trade would be if it lost 100 or so points from here. Let's just flip this over to an hourly chart and take a look so we can see the trend and some of the levels to look out for. So I think if we go back to, oh damn, hang on, sorry. Why can't I delete these lines? Remove, there we go. If we go back to March the 9th-ish, we've got our trend that looks something like that. There's the lows, 138.85-ish. And the market, bang, rose on this Brexit thingy. So if we get a sell-off back towards the mid 139s, I think it does look like potentially a buying opportunity. Let's chuck some squiggles on there because I know people like the old squiggles. So let's put relative strength index. So it's a 10-hour one. Let's flip it over to a daily chart. Here we go, 10-day RSI. So we're not overbought yet. It's about 60%. So maybe it's going to squeeze a bit higher. But I do think the opportunity is, if it starts to hook down, wait for the strength to come back in and jump on board for a push maybe to 140, 130. So, the pound has finally broken out. That trend over the last year is still up. It all still looks, to me at least, good for further strength, pound US dollar from where we are now. Let's see what happens. Euro dollar has been interesting. I think euro has been boring, but it's been interesting. I think let's just go back again to last year, to 12 months ago. We are still in this recovery for the euro against the dollar. Okay, and we're in a zone now. I think this whole 121 to 122 area, this is the trend support. So, typically we would be expecting strength for the euro off here, but it's been a real lackluster, I think, month or 6 weeks for euro dollar. What's interesting for the really big picture, and I only noticed this the other week, if you go back to 2008-ish, the highs up around about 160. We've had a downtrend since 2008 on the really big picture for euro dollar, and it's performed incredibly well. It's been almost textbook. There's the third touch. Market falls off a cliff, pushes to lows. So what we're in now, if we're looking at this big picture view, this is just a correction against the downtrend. So we have these conflicting trends. The trend for the last 12 months, definitely up. Trend for the last 10 years, nearly, is still down. So there's an argument, if you're a long-term, very long-term trader of the euro, the top is in. We could well have seen the top for euro dollar, and the next leg is down. Perhaps the more patient approach is to see if we fall out of this trend. Do we fall out of this trend that's been in place now since January of last year? And I think the sign would be if we started losing, let's say 120, 150, I think has been the big level. But what's been interesting, even though that the daily chart has been pretty boring, I think it's been the shorter term price action, because all last week, I think it was all last week, wasn't it? Or maybe all the last couple of weeks, this sort of 122.50 area has really underpinned the price. And I think, again, it's a bit of a Harry hindsight trade, but I think it's an interesting trade based on false breakouts, where everyone knows what the big level is, and the market would come down to 122.70, 122.73. 122.60, 122.57, rallies 100 points, comes back down to it yesterday. So it was, I suppose, in pretty thin trade, I suppose. After, as New York was closing yesterday, we sort of broke through this level. And I think, one way of trading it is, well, it breaks through. When we see some strength, let's buy it. And this is an hourly chart, so we have plenty of time to buy it and put a stop loss under that most recent low, which is 122.40. And does it end up being a false break? I think so far, I mean, it's only valued 30 or 40 points so far, but I think it's interesting how it's performed around this 122.50 level. But it is struggling, I think, to find much momentum at the moment, euro dollar. But I think that the big picture view, 121.50 is the big level to watch. And I do think, given that the US dollar had its worst year last year since 2003, and lots of the comments that I've read coming to this year, people are still negative the US dollar. I do think the US dollar could surprise, so maybe the next big move for the euro is down. For once, I've actually put my money where my mouth is, and I bought like a dollar index tracker thing. So I'm going to put some in every month and hopefully catch a massive rise in the dollar this year. But I think it's interesting. I think that it has been so lackluster. That 10-year trend is still down. Let's see what happens. Let's see what happens around about here. But for now, looking at this in isolation, we'd have to still be a buyer on dips because 121.50 is such a big level. So that's euro dollar. And one last one. So we have a look at euro sterling. See what's going on with that. Ha! There we go. So euro sterling doing exactly the same thing it's done now since September last year. So arguably, I think we were talking about this a couple of weeks ago, where I did nail the top. But we're back now. Arguably, there's an argument to be a buyer. We're down now towards the bottom of the range. So about 87 on euro sterling, sorry, has been a real flaw underneath this currency pair. The RSI is just tipping into oversold. We haven't gone oversold on the RSI since September last year. So I think euro sterling is an interesting one to look at these levels. Not yet, because it's still weak, but looking to see if the buyers come back in and push this back up to the top of the range around about 89.50, that sort of zone. So let's see what happens with that one. So it's been a little bit quiet, a little bit dull, but there are still, I think, interesting levels to look at. Right, let's talk about moving averages. So that's the topic that we're going to look at today. So moving averages, let me just bring them up. So I'm looking, oh, hang on, it's down here, isn't it? The simple moving average is what I'm going to look at. So let's just add one of these onto the chart. Here we go. So let's just let's change the settings. So let's change it to, oh, a 20-day moving average is okay, isn't it? Let's try and find a market that's a bit more trendy though. Let's take a look at pound US dollar maybe. So what I've done now, I've added the pinky colored line is a 20-day moving average. And if you're not familiar with moving averages, this is a simple moving average. It's really straightforward how it works. So here is the moving average today. So the moving average is got a value of around about 139 pound US dollar. So all it looks at, it's a 20-day moving average. It looks at the last 20 days closing prices, adds them up, and divides them by 20. All right, so the average price for the last 20 days has been 139. And the way that moving averages get used, of course, when the market is rising like this in this period here in January, the moving average lags behind the price because the market may be here, but the moving average is taking into account the previous 19 days prices as well, which are lower. So the moving average lags behind. When the market is falling, like here, the moving average typically is above the price, okay? Because the price is here, but the moving average, because it's a 20-day moving average in this case, is taking into account the previous loader days as well, which had higher values. So the traditional way, the most simplistic way of using a moving average is as a crossover system. So here, for example, December, 27th of December, where the price moves above the moving average, fans of the moving average take this as a sign that the market is starting an uptrend. And up we go. And then when the price falls, like back here, when the price falls below moving average. You know, fans of the moving average would take the view, okay, the market is in a downtrend, and sell short. So this works well when we do have, you know, big trends in the markets, when markets really do get a move on in one direction or another. Where it falls flat on its face is periods like this here. Let's just zoom in. So this period here from October through to November, so for about a month, where the price in this example, pound US dollar, wasn't really going anywhere. And the problem is, if the price isn't really going anywhere, the price and the moving average are very close together because the values aren't really changing much. Okay, so they're all pretty close. So the problem is, you're on this day here, you buy because it goes above the moving average. The next day, you stop yourself out and go short, and then 3 days later, you buy, and then 3 days after that, you stop yourself out and go short. Then you buy, then you sell, and then you've probably given up by here, and that's where you get the decent move. So the problem really is with moving averages. When markets go sideways, they just get chopped. They just get chopped up by the lack of a decent trend in the market. So one way that people will maybe try and refine this system is to add another moving average. So let's do that. We'll go to the little indicators thing, and we'll go to simple moving average, and we'll add that in. So we've got 2 now. So let's change. Let's say we will have a 5-day moving average. Why not? Let's do that. So we've got a 20-day moving average and a 5-day moving average. So let's just scroll it in a little bit. So what people will try and do to try and filter out some of the choppiness, it doesn't get rid of it completely, but it does help quite a bit, and it would have helped back here. Rather than trading when the price crosses above the moving average, they look for the quicker moving average, in this example, the 5-day. So we've got a 20-day and a 5-day. So they look for the quicker moving average to move above the slower. That's our buy signal. So the 5-day here, let me just zoom in again a bit more. The 5-day here moves above the 20. That's our buy signal. Sticks with it all the way up here. And then when the 5-day, in this example, drops below the 20, that's our sell signal. So rather than using the price as the trigger, it uses 2 moving averages. And actually, you remember this messy bit here from October to November, where if we were using the price, we were buy, sell, buy, sell, buy, sell. We were short from here because the 5 falls below the 20. Maybe we'd have bought there, but maybe it didn't quite cross over. And then it gave another buy signal there. Okay, so it didn't cross over there. So we'd have been short. We'd have avoided all the chop here and bought back in there. So that, I did actually pluck these at random. I mean, 5 and 20 to me makes sense because a 5-day moving average is a 1-week moving average, 5 trading days. A 20-day moving average is a 1-month moving average, near enough. It's 4 weeks, isn't it? So that's a way of using 2 moving averages together. Okay, so we wait for the crossover. So looking at pound US dollar at the moment, the last signal we had was here. It looks like on this day here, on that day there. I can't remember, maybe, I don't know, one of these days. And it was the buy signal. Okay, so at the moment, the 5 has crossed above the 20 about a week ago, and it's long. Okay, so that's moving averages. There's always a downside. They, you know, like I always say when we talk about this stuff, there's not a perfect system. The problem is with moving averages, they're always in the markets. If you're using a moving average crossover system, it's effectively what's known as a stop and reverse system. So it's always long or short. You know, it doesn't have the intelligence to stay out of the market. But using 2 together is one way of maybe filtering out some of the more dubious signals. Okay, so that's moving averages, classic trend following indicator. Right, we've done currencies. Let's take a look at stock markets. Let's take a look at the S&P 500. Where is it? Here it is. Finally, we have seen the weakness come back for the S&P. So we had, I think I was saying a week ago, I was surprised at just how strong this market had been. But we did have, why has my screen frozen? Hold on a second, let me just flip this over and bring it back again. Right. So I was saying I was surprised how strong the S&P had been, but thankfully, well, for me anyway, over the last week, the market has turned around. You know, we've lost quite a bit of ground. over the last week. You know, I think I said when we saw this massive volatility in early Feb that I really could not see US stock markets hitting fresh all-time highs anytime soon. And I think the name of the game is going to be just chop. You know, so I'm definitely expecting more of this from here on in, you know, but we do still just about have, I think, this recovery off the lows still going for the S&P. So let's just take a look at that on an hourly chart. Oh, my screen really isn't very happy today. Hang on. So there we go. So that was the vicious sell-off in Feb. Came back and retested it. So again, Harry hindsight, great trade, buying the bounce off the lows. And this is where we are now. And I think it's difficult where we are now because we've got a clear level left up here-ish ahead of 2,800. We've got a level left down here, 2,650-ish. And we're pretty much in the range. You know, we're sort of 65 points above that level. We're, I don't know, 70 points below that level. We're a little bit in the middle of the recent range. So I think it's difficult to call. So if I was a betting man, my money would be on it when we do the webinar next week, being on it trading around here. So we'll have plenty of volatility, but maybe not much in the way of change. So I think it's a difficult one to call. But clearly, if we start trading down below 2670, which we could do, you know, if we see a big sell-off the next couple of days, we could see that happen. Let's see how it performs, you know, down at these old levels. Let's see what happens. So I think levels going into today, where are we today? The 21st, isn't it? I think it's going to be the lows from yesterday. Yesterday was a really quiet day. So, but we did see the lows from yesterday actually over quite a few hours. Let's just bring that out to a 10-minute chart. There we go. Where are we? So these lows from yesterday, sort of 3 o'clock, 27:08, and then 5:30 UK time, 27:08. So this is clearly short term a big level to watch if we see the market under pressure. But again, I think we will see a quiet session today until these latest Fed minutes are out of the way. So with the S&P, difficult one to call from here, but personally, I'm still expecting more of the same. After the big shock we had in Feb, I don't see these markets suddenly regaining loads of confidence and going off through the roof. So very sort of tradey markets rather than investy markets. Let's take a look at the FTSE. FTSE, it's interesting. FTSE, I think the pound strength is clearly weighing a bit on the FTSE. You know, we always see this when we see pound strength. It often stifles any progress in the FTSE because so many FTSE 100 companies derive their money from overseas. So a strong pound means their profits, when reported in pounds, may well be lower than if the pound was lower. So, but it's interesting. I think, you know, it's where we're trading now. Look at the lows for the FTSE. We're about 69.20 in that big sell-off. The market's currently trading about 100 points above that level. So the market's trading, what, 70.28 at the moment, 7,028. So let's see what happens. You know, if we see a couple more days of FTSE strength, you would expect the buyers to come back in ahead of here. But if we lose that level, let's take this out a little bit further. If we lose that level, there's quite a bit of fresh air then. You know, there's a lot of potential downside if it starts to edge its way below 6,900, the FTSE. I mean, it's pretty oversold at the moment, you know, because it's been so weak. And maybe there's a bit more to go on the downside, but let's see what happens around about 69.20. So it's all a little bit odd with stock markets at the moment. But I think one of the more interesting markets at the moment is oil. So I'm going to save that until the end. Before we look at oil, let's take a look at the price of gold. Because gold, there's a really big level. Gold, you know, if we treat it like a currency, just another currency, like pound, US dollar, and euro dollar, it's been a pretty dull week or so. But gold, there's an obvious massive level to watch on gold, and it's 1,300. So $1,300 an ounce. You know, all this year, near enough. I mean, 1,306 was the low. The other week, it traded as low as 1,303. So 1,300, I think, is near enough the big level to watch. So we keep seeing it banging back from the 1,360 area. But when it gets to 1,300, like today, you know, we've got this bullish engulfing pattern today for fans of the old candle patterns. So again, an aggressive trade, assuming we end around here today, would be to be a buyer with a stop loss under yesterday's low. Yesterday's low was 1,307. and looking for the market to see if it can squeeze up to 1360. But 1300, really the big level. If we lose that, because of the strength of the rally we saw in December, I think again there's a lot of fresh air potentially back to 1250. But 1300 so far has been well defended by the bulls this year. So any weakness back to here does look like a buying opportunity, and we've seen it again in the last 24 hours. Okay, so it's been a pretty tight range for the last month or so, but it's still holding the market up so far. And let's wrap things up and look at oil. So let's have a look at the price of oil, because I think this has been really interesting. Or it's been a really good market in terms of big levels. My favorite topic, trading. Oh my God, that's not a very pretty chart, is it? I think the contract. Oh, has the contract just rolled over? Hold on a second. Hold on. Oh, we can still see the levels. Let's have a look. So this is the May contract for oil. Okay, so we don't really have our big picture view for that. Is that a different one? No, it's the same. Okay, we've lost our big picture view for that. But it's been really, the really big levels have performed fantastically on oil. So the beginning of March, the price dipped down to about $60 a barrel, then rallied up March the 12th to 62. Then sells off, about a week ago. So this time last week, sells off, and it gets as low as about $60.18. So $60 has been massive support. The price ramps up a bit, and we're here. We're trading here now. So I think the trend that's been in place since last summer for oil, when it was $42 a barrel, is still very much in place. And I think the obvious target is for a run back up to those old highs at 66. So, even though everything else has been a little dull, we have had some good moves and some big levels hold on oil. So at the moment, any weakness, if we get, what was this old level from 2 days ago, $61.50. If we get any weakness back towards 62, 62 and a half, it looks like a buying opportunity. So there's been, I think, a real appetite to be a buyer of oil. So that's maybe another one to watch. But I think the ones I'll be watching, again, it's funny today because we've got this announcement this evening, but pound US dollar I think is interesting, because we've broken out of the old triangle thingy-majiggy that we were in, but maybe it's got a bit overextended. Maybe it needs to unwind and come back and set up another buying opportunity. Euro dollar, and they will all move this evening on this Fed statement. So euro dollar, 122.50 has been a big short-term level. 121.50 is the other level, and that's probably it. Stock markets are just still sort of stuck in the middle of nowhere. So I think there's a couple of things maybe to keep an eye on. And I'm sure in a week's time it will all change, and we'll have some different levels to look at. We'll start wrapping things up there as usual, but any questions, you can drop me an email. Let me put my email address up. There we go. You can follow me on Twitter for half interesting charts as and when I see them, and remember to post them on Twitter. My Twitter address is at Jones the Markets. So that's that. But we'll see. So like I say, expect a quiet afternoon. We've got the Fed at 7 o'clock UK time. Plenty of volatility after that, and then hopefully we'll have some clearer levels to look out for. So we'll end things there. Thanks for coming along, and enjoy the rest of your afternoon.